so we're going to get started. So once again, thank you to everyone for joining the Optionality webinar presented by Lightspeed. So before we get started, have just a quick disclaimer to run through. So this presentation is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation to buy, sell, or hold any security or contract. Since we don't know everyone's investment objectives or risk tolerance, we are not endorsing any specific trading strategies. Security, derivative, and futures trading involves a substantial risk of loss and is not suitable for all investors. Each investor must consider whether this is a suitable investment, since you may lose all or more than your initial investment. Past performance is not indicative of future results. Lightspeed Financial Services Group, LLC is not affiliated with these third-party market commentators, educators, or service providers. Data, information, and material content are provided for informational and educational purposes only. This content neither is nor should be construed as an offer, solicitation, or recommendation to buy, sell any securities or contracts. Any investment decisions made by the user through the use of such content is solely based on the user's independent analysis, taking into consideration your financial circumstances, investment objectives, and risk tolerance. Lightspeed Financial Services Group, LLC does not endorse, offer, nor recommend any of the services or commentary provided by any of the market commentators or educators or service providers, and any information used to execute any trading strategies are solely based on the independent analysis of it. Let's get into the Optionality widget. So just for kind of some quick background and introductions. So I'm Alec Baum. I'm a VP at Lightspeed and one of the co-founders of Optionality. I do encourage questions throughout the presentation. And we can answer probably most of them at the end. I'll kind of do my best to peek over the questions, but we'll probably try to hit them at the end. We do also have a promo coming at the end, so we'll give more information about that once we wrap up. But for some brief background just on myself, on Optionality. So I've been in the option space for 15 years-ish now. So I started at Susquehanna International Group. They're a derivatives market maker. Do a little bit of everything actually, but was there for a couple years out of college. Then ran some option strategies at a couple different private family offices after that, and then started Optionality. And Optionality, we were a broker dealer focused on options and specifically option spreads. We owned our own tech. We had a platform. We specifically kind of played in the retail market. But again, kind of a lot of that focus was on option spread trading and spread technology. We got acquired by Lightspeed in September of 2023. And since we've been with Lightspeed, we've been working on a number of options initiatives within the firm with that technology. And this is kind of the latest thing that we've debuted. So the Optionality widget has been in use now for a couple months. And we're kind of, this is part of our launch of the technology. So what is the widget, right? So general kind of purpose and goals of it. So the widget is a new feature inside of the Lightspeed Trader platform. And really the purpose of it is to offer traders a new way to trade options. So we do both single leg and multi-leg options, but again, kind of a focus, I guess you can say, on multi-leg. And really we want to increase the efficiency and customization of options trading. So what are the types of spreads and strategies that we offer? So again, we do offer single leg, both for equity and index. We have debit and credit spreads, vertical spreads. We have iron condors and iron butterflies, strangles and straddles, covered calls, and calendar spreads. And we will have like things like ratio spreads and kind of different spreads coming in the next few months as we continue building this. But these are the spreads that we're kind of getting started with. So just a quick, just kind of wanted to run through like why people might trade spreads as opposed to single calls and puts. So number one, spreads can be a useful tool to subsidize the cost of trades. So by selling a leg, especially in the case of debit spreads or credit spreads, you're effectively reducing the price that you would pay for a single leg. So that in turn creates a more attractive break-even price. So just kind of running through an example, if you have an at the money call and you wanted to buy it, it was $10, you have to outlay all that $10. If you then sell a call on top of it that's $7, now you're effectively reducing your price to $3. And so, number one, it's less cash upfront that you're outlaying, but number two, it's going to reduce your break-even price. And it's going to, make that trade all else equal have a higher probability of finishing at the money. It can also be good play during periods of expensive volatility. So things like earnings or any time that you see kind of volatility increase throughout the options chain, being able to play on both sides of that is going to be super helpful, and you're not going to be as exposed to factors such as option pricing Greeks or, specifically expensive premium. If you're able to play both sides of it, you kind of reduce a lot of that noise, and you can get back to kind of, pure price movements. It allows for neutral biases to play out through, strategies such as iron condors and butterflies. So you can take more protected short volatility views, or if your view is that a specific index or security is going to be range bound, you can take that view with the spread much easier. It can be used to generate income, such as covered calls, right? Obviously that comes with reduced upside, but covered calls are a very popular strategy, and we have a whole covered call menu. And then things like binary events. So if it's an FDA announcement or there's kind of a major positive or negative news story coming out, you can play both sides of it, right? If you're unsure how the market reacts, but you think there's going to be a sharp reaction in one direction or the other, something like a straddle or strangle can give you that viewpoint. There's a ton of other reasons why you might want to do spreads, but those are some of the high level ones. A common theme that we hear all the time, and really, we're traders too. So something that we've experienced is that they are cumbersome to put on. They take too much time. Have had frustration with certain platforms and the way that spreads are ordered. It can just be confusing. I've had my share of having to map things out in Excel, and just kind of takes too much time. So this is essentially a solution to that problem. So, why is the widget specifically beneficial? So we do a couple things that are fairly unique to the industry. So number one, we have an algorithm that effectively goes into the options chain and then creates up to 12 different spread trades per strategy type and per expiration, then organizes them into a menu. And so that organizes them into a menu and then lists them out by risk level. So low risk, medium risk, and high risk. Here we define risk as distance from the at the money strike. So we'll give you a couple spreads that are below where that at the money is trading. They're in the money. We'll give you a couple spreads that start where the at the money strike is, and then a couple spreads that are out of the money. And we'll go through those menus later. So not only do you kind of get a bunch of different pre-packaged spreads available to you, but we believe that provides a better visualization of risk reward. So that's both in the form of payoff diagrams that we have that are interactive and kind of dynamic with market price changes, but also just being able to see up to 12 different spread trades per expiration in a second or two. That's going to give you the power to be able to compare those and look at different metrics. And you could compare yield on covered calls, you can compare money on invested capital for spreads, and you can see what the differences are and what trade might fit your risk tolerance better. So that's something that we found to be super helpful. So getting into the widget, you can see in this layout right here, the widget's at the top left. So this is kind of where it is. This is the predefined layout. So this is what we call the optionality widget layout. So this is a recording here. I put on a trade here. So obviously this presentation being outside of market hours wasn't able to do that. So I am going to go through a recording here. And so if we want to kind of just look at how do I load the widget, if you have a Lightspeed account, you've been trading options but are interested in the widget, how would you go about loading it into your current layout? So you click on new up at the top left up here, and then in the drop down you can kind of see right there is the optionality widget. It's in that kind of there's a bunch of order entry tools there. Optionality is sort of in the middle of that. If you were to click on optionality, the widget pops up and there's your window, and you can kind of just fit that wherever you see best within your current layout. If you are new to Lightspeed Trader and you like this layout that I have in front of you, it kind of hits all the points of having a watch list, having the options chain, having a graph, your positions and orders, and then the widget. We don't have it yet, but we're going to populate this saved layout in that load predefined layout, which you can get from layout up top and then load predefined layout. We have those three equities layouts, and then we'll have an optionality layout on top of that. So that will effectively give you what you see on this recording here. So an overview of the UI. What are the different things the widget can do? So you can search within the widget, your symbol, right? So if you wanted to search Tesla, you can do that there. If you wanted to search that within the options chain, you can search the VIN, you can see the widget populates there. Or you can go to your watch list and you can double click and then it kind of populates throughout. So that's something that the widget does play with all those different components of Lightspeed Trader. You have a graph here. Right now, it's just a line chart. We do plan on kind of increasing the functionality of that. For now, it just kind of gives you, a trend analysis, if you will, over those kind of 4 different timeframes that we offer. I do like having a more interactive graph, so I have kind of this chart down below, but eventually we'll have this be a more interactive component of the widget. We have a quick trade button, which allows you to quickly do single calls and puts, and that's less of the menu format that we have, and it's more of just a super quick way to trade calls and puts. We'll go through that a little bit later. And then we have our 4 strategy types here. So we have bullish, bearish strategies, neutral strategies, and then we have a custom options builder. And that custom options builder effectively allows you to do any of the strategies outlined, but just, you pick everything. So the types of bullish strategies that we offer. We have a debit call spread, single calls, and that's in the form of a menu, credit put spreads, covered calls, and short puts. On the bearish side, we have debit put spreads, single puts, credit call spreads, and short calls. Neutral strategies we offer iron butterflies, iron condors, straddles, and strangles. And then, as I mentioned before, we have this custom options builder, and it allows you to do any of those strategies outlined. And the calendar spreads that I outlined earlier, so those are only available in the custom options builder. We should have those out within the next week or 2. But those we don't have a menu for those. Those are custom only. But effectively, you can pick your strategy here through custom. We'll go through a custom one later. But yeah, those are the strategies outlined. So we're going to go through quick trade first. So again, quick trade is essentially just a way to be able to trade single calls and puts. There's no spreads here. But what we do is we center around where the at the money is. So you can see the at the money is kind of in the middle there. Those are puts. And then you can switch back and forth between calls. You have your calendar there if you want to switch expiration dates. We also have expiration dates listed on top. It always defaults to the closest expiration. So these are all 0 DTE here. So if I scroll down, you see you have the at the money here. We get the strike, open interest, volume, IV on the option, and then different prices, right? So these are the bid, mid, and ask, and then you have market. If you click on any of these, that will populate an order entry and peg at the price, right? So if you wanted to, put an order in at the bid, you double click on that bid and it pops up. And then it just sends the order out there. If you want it, if the bid changes, it just kind of keeps where that bid is. If you wanted to do a market, it sends a market order out. So we'll actually enter an order here. So I clicked on the bid there. You can see it matches up with the bid. You can buy it or sell the option here. So you have the ability to toggle back and forth. Super clean, simple way the order entry is laid out. Gives you the total debit there. And then when we're ready to execute, confirm pops up, you hit yes, and it executes, and you got it at 120. So that's actually a real trade that executed there from that. You can see super easy and clean to do. So that's quick trade. Going through the strategy menu now. So we're going to start with debit call spreads. So here we have the menu populate. And again, you can see it's the same basic layout, right? You have your calendar view up here, available expirations on top, and then we get into the actual menu. So again, we'll have lower risk bucket, medium risk bucket, and higher risk bucket. They have, depending on the available strikes, they'll have 3 or 4 trades within each. And then you can see, so the lower risk bucket is a 590, 591 call spread. That's in the money, right? So SPY's trading at 592 here. Obviously, this was a couple days ago, but that break-even price is 590.67, right? So that whole spread is in the money. We give you the cost of it, $67. Your maximum potential gain, 33. The max profit multiple. So we think this is a really helpful metric to just show you kind of the metric between the two, right? And that's just the gain divided over the spread cost. And then this break-even probability is essentially an offshoot of the Black-Scholes model, where we're taking the break-even price and essentially determining the percentage likelihood that it finishes there or greater, right? So that's that break-even probability percentage, and you'll see that on pretty much all the things that we offer. So the way that we build the menu, again, we start with that lower risk bucket, and then we increase by strike width, right? So you can see the 590, 591. We keep that base 590 strike as the buying base, but then we go to 590, 592, so it's a little bit wider. You can see it's a $2 spread, right? So it's 127 is your spread cost versus 73 is your gain. And then we continue to increase that, right? So we'll do a 590, 593 and a 590, 594. And that's kind of what that lower risk bucket looks like. And then we use that same logic throughout the menu for medium risk and for higher risk. So here I clicked on the lowest risk bucket. So this is the payoff diagram that we go through. So you can see on top here, we list out the strikes. You're buying the 590, that's the green button here, and then you're selling the 591. So just kind of a visual representation of it. Your net debit, this is a debit spread, so that net debit is going to be equal to your max loss. Your max profit's $34. That break-even probability just kind of flows back through to here, and then that break-even price. This is a 0-day to expiration trade, so you have 0 days to expiration. And then you can see the profit and loss diagram here. This is interactive, so if you click on different points, you can see what your P&L is at different prices. We also do have the stock price that kind of floats throughout here in a bar, but because this is so far in the money, I think the 592s here, it's kind of off the graph here, but you will see that in other places. So kind of moving ahead a little bit, if you scroll down, you can see the expiration date here is March 3rd. That's the date of the recording, so that's that 0 DTE. And then we have a vol analysis where it gives implied volatility, volatility rank, and volatility percentile of the underlying. So those are all kind of helpful metrics. So once you go back into trade details, you can see the option symbols. So buy to open 590, sell to open the 591. We give open interest, volume, and IV on both of those. And then again, we give the expiration date and vol analysis that you saw before. And then we do have Greeks as well, kind of throughout the rest of the trade details. And then scrolling down, you have kind of order entry if you keep scrolling down. So that's number of contracts, the order type, so limit or market, the limit price. We peg this to the midpoint unless you change it, and then it kind of goes to whatever you change it. So we change it here to 25 cents, total debit, and then the time enforced day or good till canceled. So if we hit execute trade, the confirm pops up, basically just confirms all the details. We change that, remember, to 25 cents. So that's what you see here. We're going to go ahead and say no to that confirm. So you're going to get the rejection. And then that's kind of what the debit call spread looks like. So now we're going to go through a couple more strategies. Debit put spread. Again, you kind of see the menu populate. It's the same functionality as a quick trade where you have the calendar pop up and you can see that view and choose your expiration through that. We're going to choose May 16th, and then that populates May 16th menu. So you'll see that here. And then again, we have the different trades populated for May 16th. Lower risk bucket, you can see how we're scaling out that menu. Here's medium risk bucket. So again, medium risk bucket, we start, this is a put spread, so we start at the money, that's the 593, and then we kind of work our way down. We increase the width of those strikes. And you can see the max profit multiple here. They continue to get more attractive because the break-even prices are getting, or the break-even probabilities are getting lower and lower, right? So those kind of have a negative relationship. And then if you scroll down to the higher risk, the medium risk bucket there. Okay, so we're going to choose this one in the recording. Again, it's kind of the same thing, right? You have your payoff diagram, net debit, max loss, max profit. It's the same stuff as what you saw earlier. You have your payoff diagram, and then yeah, you kind of have your strike visualization up here. And then we can get back into trade details. Here it's a put spread, right? So you're buying to open the 593 put and you're selling the 592 put. So again, same type of details, it's just slightly different because it's puts versus calls. Same expiration date, volatility analysis, and Greeks kind of throughout. So all of these look very similar by design. Only the details are going to change. And then you have your same order entry down here. And yeah, you're kind of off to the races there. So the last thing we're going to go through in terms of the predefined menu is the iron condors. And we see a ton of people trading these iron condors on 0 DTE basis, right? So a lot of SPX, a lot of SPY, 0 DTE, iron condors, just bracketing kind of where the market's been. Hasn't worked so well in this environment, just we've seen with the magnitude of moves we've seen. But in lower vol environments, we do see that quite a lot. And so I think this is a really helpful tool to be able to do that quickly and also be able to see, what are the different spreads that I could be putting on and, maybe some downsides versus upsides in terms of the pricing and probabilities. So construction of this menu, you can see we start the lower risk bucket. It's a little bit different for condors, right? It's not as straightforward as just debit spreads in terms of like how to quantify the risk. So the way that we quantify the lower risk bucket is wider, right? And you can see for a 0 DTE, this is a 590, 597 is the body. Those are the strikes that you're selling. 583 to 604 are the strikes that you're buying. So those are the wings. That's a huge range. So the probability there is 93.8%, but that's reflected in, the max gain is 131. Your max loss is 570 almost, right? And so that's super unbalanced, but it's because the probabilities, the wings are so wide and the body's so wide that it's going to take a serious move to not finish in there. And so that's why the gain versus loss is kind of as lopsided as it is. But again, the way we construct that menu is by starting it super wide, and then as you go into medium risk, it gets a little bit more narrow, and that max gain to max loss ratio becomes a little bit more balanced. So we'll scroll down. Here's the medium risk bucket, and again, you can kind of see so the 591, 596. Again, we're bringing it in a little bit. That max gain to max loss looks much more balanced, but again, the break even is going down. And then once you get to the higher risk bucket, right now you're getting closer to 50-50. Your max gain is 66, max loss is 32. And yeah, that's a much more narrow range, right? Your break even prices are 591 to 595 here. So it's just kind of how the prices present themselves. But again, we really like this for any of these, but we see a lot of use in it for the 0 DTE crowd who loves to put these on kind of every day as a strategy. So again, we'll get to this payoff diagram. You have the options that you're selling. So you're selling the 590 put and you're selling the 597 call, and then you're buying the 583 put and 604 call. So that's just sort of another way to display that. You see down here your payoff diagram. So this is a credit position. You receive $128 of credit. 572 is the max loss. Again, the break-even probability flows through, and then the break-even prices flow through. And again, it's all kind of the same information here where you have the expiration date and the vol analysis. So then going back into trade details, obviously there's going to be more option symbols here to list out, right? So you're selling the 590 and the 597. And then you're buying the 604 and 583, right? So we give kind of all the relevant details there. In terms of open interest, volume, and IV, your expiration date, March 3rd, and then the vol analysis of the underlying. Greeks have those here as well. And then the number of contracts, right? This is sort of, again, order entry, right? So the one thing I'll call out here, order entry is going to be a little bit different because right here is the, it's going to be negative, the prices that you pay, just because it's a credit position. So those kind of look a little bit different, but that's by design. So again, order pops up, the price is 126. And so we're going to hit no on this again. So you'll see the rejection there, but again, it's that easy to do a credit or to do a iron condor, right? Setting one up previously, it takes a number of clicks and you're having to look at the strikes, and here it's super easy to set up. So yeah, that was just a couple clicks. So here we'll go into custom options builder. We're going to build an iron butterfly. And again, this is probably the easiest way to be able to do it yourself in terms of what Lightspeed offers. So we'll choose neutral strategy. That iron butterfly is in that neutral strategy. First thing you want to do is select an expiration date, right? So we have these in a drop-down form. Here we're going to go March 7th, so a week out. What we do here is we populate the put strike and the call strike the same, right? Because it's a butterfly, so those strikes are going to be the same that you're selling. You can choose whatever you want to from the put strike, and then that's just going to populate both. So then you choose your buy strike on the wings. So So you've got your 585 we're going to sell, or we're going to buy the 585, and then we're going to buy the 598. So this is a little unbalanced. It's mostly balanced, 7 down, 6 up. But you can do these, however you want to do. You can do totally even, right? You could do 6 up, 6 down, 5 up, 5 down, or again, if your biases tell you so, you could do 1 up and you could buy 10 down, right? You could kind of construct these however you want to. But yeah, break-even probability here is 44%. The max gain is 540 over max loss of 160. And these are a week out. So we're going to go payoff diagram. Again, it's kind of the same stuff we've been looking at. The only difference we're selling the 592 put and call, right? So you see those kind of on top of each other there. And then we're buying the 585 put on the one wing and buying the 598 call on the other wing, right? And then you see kind of where that max gain is, what the P&L is on that, and you see you can kind of see here they're uneven, right? Because the wings are not even 1 6 out, 1 7 out. So you can see that they're not totally even there. But other than that, it's pretty much the same information in the payoff diagram and in the trade details that we've been looking at. So yeah, that's kind of it on the menus and on the information that we provide behind them. You can see we only went through 3 of them, but we have tons of them, right? So you get that kind of benefit for all of those strategies. What we're going to do now, if you remember, we put on this SPY call at the beginning, right? So now we're going to close the trade, and you can do that in the widget too. So what you want to do is right click on here, and you can close that in optionality. That's 5 down. We've had all these in Lightspeed Trader. We added close in optionality. If you have a debit spread or any spread, right, 2 legs, 4 legs, whatever it is, you're going to have to right click on all of them, right? So kind of highlight all of them and right click, and that way all of them get transported over to optionality. But it's as easy as hitting close in optionality. This pops up, right? So super simple order entry. It's got your bid, midpoint, ask, order type, limit or market, and then number of contracts and limit price, right? And then that kind of total value there at the bottom. So, again, you could kind of peg it to a price. If you want to put in here $2, you can do that and leave that order out there. What I do here is just send it to a market order, close a position, and then, there you go. And it's that easy, right? So that's, again, this is a super high level kind of view of the optionality widget. The other thing we want to point out just before we get to questions is options level, right? So if you're a Lightspeed Trader client and you either have an account but it doesn't have the right options level, or if you get an account but get approved with 0 or 1, the previous process had been to print out a PDF, fill it out, wet ink, sign it, scan it back in, then email it to a Lightspeed service account representative. So the way that we're doing it now, so we'll recognize if you have the options level set up or not. If you don't, we kind of pop this up. You can update access by clicking this button, and then you're essentially doing filling out all the account information here. So things like account number, account type, title, things like that. We then take annual income, investment objectives, total net worth, right? This is sort of gathering the information to make a determination on the account level and whether or not we can upgrade it. So things like, I think the next page is, a lot of options, investment experience, and right, we need kind of the full complete picture here. So once this is uploaded, it takes you to the next page where if it's option level 3 or above, you need a margin account, right? So we have checks built in for that. You can see that up there. And then you just kind of sign where it says sign. Once you hit submit, that sends it directly to a Lightspeed client services representative. They'll look at it. If they have any further questions, they reach back out to you. But it's a super simple process. So it's kind of head and shoulders better than what it was before, and hopefully for those people who have who do want to upgrade, that process will be significantly easier now. So that is it as far as the presentation goes. Again, thank you to everyone for joining. I did mention we have a promotion for new accounts. So if you create a new account for Lightspeed Trader, want to get started with options, if you enter the code options35 while you're setting that account up, then you'll get 35-cent commissions for basically for life, which is a pretty nice discount from what the initial starting rate is. So that promo is good, you know, for however long. We will send you an email for it, I believe, and then I think Adam might send a link around for it now. But again, that's for all new accounts, options 35. So that's it. The only question I see is, so I see, when will the layout be available? So the layout is available now. So the only thing you have to make sure is that you are on the latest version of Lightspeed Trader, which is, I'm not totally sure what the latest version, yet right here, 8.2.765. So that's the latest version of Lightspeed Trader. It is available right now though. So as long as you're updated to that version, you should be able to see it. But if not, you know, reach out to someone, we can help you get started. The Mac software version, yeah, so that's a great question. It should be available now, but I know I think we've had some issues with kind of the initial deployment across Lightspeed Trader. So we're working on it actively. I know we've had a version out, but more to come on that. We're definitely, that's one of our biggest priorities right now. Yeah, Aiden Orozo, I see. Yes, I would like to try the layout. Yeah, definitely. We can get you hooked up with that. Let me see. Please explain why we have to choose Lightspeed when there are a lot of other options. Yeah, you don't have to choose Lightspeed, but we do think there are a ton of benefits for Lightspeed, and you know, things such as this, and you know, a handful of other reasons why we think Lightspeed is a great selection. Cool. Yeah, it looks like those are all the questions there. So if there are any questions that were unanswered, obviously feel free to reach out to me. My email is abaum@lightspeed.com. We'll make sure that goes out. You can reach out to the trade desk, or you know, whoever your contact is at Lightspeed. You know, they'll kind of direct you to us, and we can help you get started. We're happy to do things like private demos or phone calls, or you know, whatever it takes to kind of to help you get up and running. So once again, thank you for attending, and yeah, if there are no questions, that ends the webinar. So thanks everyone.